The screen. Joining in to discuss this with us is Dipen of HDFC Securities. Dipen, thanks very much for joining us on the show. So we were just sort of recapping a lot of the concerns, the factors that are playing out. How does this market make you feel? I know that's a very strange, cliched question, but this continued selling that's coming in, the way mid-caps continue to get butchered, if I could use the word, is there a bigger correction coming?
Yeah, so we have been staring at this binary event, the Lok Sabha elections, for a while. It's known. It's nothing that's unknown. The outcome is unknown. And you can have a huge swing either way. Apart from, the global uncertainty, the trade wars, Brexit, oil prices going this way and that way and keeping us on tenterhooks all the time. But on the elections, because when the results around the elections will come, or the first hint of what is likely in the elections is going to be established in people's minds, I think nothing else will matter. And for all the commentary that market men give you that, elections really don't matter for the long-term trajectory, and that's what the historical evidence is. Well, my feeling is that history is not going to be a useful barometer this time, a useful measure of how to look at these elections, because these are pretty much make or break elections. And I'm not even taking sides here. I'm not even saying, oh, but if the BJP doesn't come back, will we fall? No, I'm saying there's every chance that this time around we are going to see a hung parliament. A messy, noisy and hung parliament. And to my mind, that's the single biggest risk factor. You can again go back in history and tell me, but we've had a hung parliament for decades and we still grew. Well, we are in a position where we can't afford to grow at 5 and 6% anymore. And we can't afford to have the kind of, the governance mix, the policy mix that will make us grow at 5 or 6%. There is no way that we can afford to do anything under 7 or 8% on a consistent basis. And even that 8% has got various shades and breakups and drill downs. If they're not taken care of, and I don't see a hung parliament being able to take care of them, we're going to have a serious problem in this country, and that's the question that investors will raise, and to my mind that's the market risk right now.
Dipen, welcome to the show. Well, it is also this week is marking the end of earnings season as well, right. Q3. And obviously this week, the end of earnings season sees a lot of the mid-caps come out with numbers. Yeah. What's your assessment as a whole in terms of how earnings season has panned out, and any stocks which stood out to you based on maybe a buy or a sell now? So
earnings by themselves, the reported earnings do not make that big a difference unless they are completely out of whack with what was expected. If there's a very clear beat with some sustainable reason behind it, or a miss, either way. And some of that has actually played out. But I think it's the commentary that people always look for very carefully, unless the numbers are swinging wildly and there's a reason that is going to make those numbers persistently high or low. The second thing is again that in view of the persistent lack of clarity around the election outcome and all the political turmoil that we are seeing, plus the global turmoil, I do feel that earnings season has taken a bit of a backseat. In any case, I'm not a big fan of the earnings season as such, as much as I'm a fan of, analysts getting the direction and the trajectory of earnings right. And God knows many analysts, including mine and including myself, we've gone wrong on that trajectory for the last 3 or 4 years. So we've had stagnant corporate earnings for if you look at earnings CAGR over the last 3 years, not just the Nifty. In fact, the broader market hasn't seen too much of growth. And I don't think the third quarter numbers inspire that confidence that are we on some massive turnaround there. Of course, the stuff that is healing and that is known has begun to show its colors. The stuff that was in very good shape, arguably not in such good shape 2 years ago, but about a year and a half ago, we called out on IT, much of that is okay. I don't think any of those theses are broken. So if you tell me, is there a big directional shift visible right now in earnings specifically? Nothing that most brokers hadn't called out a while ago.
Okay. So I want to sort of single out a couple of very interesting results. Yeah. For instance, look at what a Page Industry did and the way the market read those numbers. Of course, there was this debate about whether it was this accounting issue of Ind AS 115, and that's why the revenue optically was a little higher than what it could have been or what it actually was. Right. But that argument aside, I mean, is this the market's thought process that even a stock that's been sold down so heavily continues to get derated? Look at United Breweries. The numbers were roaring for the third quarter. The management saying fourth quarter, maybe we can't do 16% volume growth. Maybe we'll do 12%.
Right.
Market is just not interested.
Yeah, so both Page and United Breweries are fantastic businesses. Let's not take away anything from them. They're not under our coverage, so maybe I don't have a formal recommendation to make at this point of time, but that's not important. These are very high quality businesses, very strong franchise, and the market is not, like you said, willing to listen to some of these guys even after they've been beaten down from recent peaks and so on. Well, that happens. I think they're still in a much better place than some of the poor infra stocks. Some of the mid-cap banks, for example, who are struggling with their numbers. And I think the larger message that is coming out, if it's bad news, we will believe it all. If it's good news, we will take it selectively, and we'll only believe what we've made up our minds to believe.
So that's exactly what I was trying to understand.
There's a lot of bias in the way the market is reading these, and you cannot wish that away.
Yes.
So you can't wish that away, because that ultimately it's the price that's going to matter. And if the whole market is against you, and you may be right on the stock from a 2-year perspective, but for the next 6 months you're going to look like a fool. Is that an opportunity? Yes, it is. But is that an opportunity for someone who is leveraged right now, who is sitting on a leveraged position and who has to pay back debt to fund, which has funded their stock holdings? So I'm telling you, people in the F&O segments, people who borrowed to invest in stocks are going to be in deep trouble, and that includes some of the promoters of Indian companies. Okay. Now, if you look at the so to come back to the question you had raised, how is the market reacting to earnings? So let's look at the bad news when it comes. You've shown me 2 stocks which didn't do badly and which are high quality businesses and which have been punished. Okay. So look at a struggling mid-tier bank like Karur Vysya. Okay. We've known about the asset quality problems for a while. There's this brilliant and gifted new CEO who's in charge, who's been cleaning up the bank, and we are prepared to see the stress that is being reported. But that comment on future stress,
SME slippages,
and cumulative cumulative 5-quarter view out into the asset quality funnel completely spooked investors. Okay, now does it mean that all those GNPAs will actually crystallize? Maybe not. Maybe he's being conservative. But is the market willing to take anything with a pinch of salt right now? No way. These are difficult times, and at difficult times when you talk bad news or when you give bad guidance, people will just run for the exit gate. And that's what is happening. This is going to, mark my words, we may not be at the bottom of this correction, but this is going to throw up some beautiful opportunities for all you guys out there who haven't invested seriously in the Modi era, if I can call it. Arguably Modi era 1, right? If you haven't invested and felt that the market has given you the slip, who knows, we are probably entering a golden phase for value investors all over again. Be patient.
Dipen, I'm sure that a lot of people even want to buy a stock such as, say, a DHFL at current levels or a CG Power at current levels because of the kind of fall that they've seen. What would you advise in such a case?
I'm so happy you are continuing to pick stocks that are not under my coverage. So I can make reckless comments about them and get away without having to make a formal recommendation. But I think the bigger message I want to convey is that just because something's halved doesn't mean it can't halve again. And so you have to look at the intrinsic quality of the business. So Z's run up from the bottom despite that promoter overhang is probably because, well, this is a great business. It's spewing out cash every year. Okay, and we are seeing that. So I'll give you 2 more examples here. Okay, so if you must bottom fish, if you must look at this as an opportunity, so I'll buy some now. Yes, it can fall 20%, but this is a good price to buy. If that is the attitude with which you're going to buy, I'll give you 2 mid-cap stocks, high quality companies, high return ratios, market leaders in their respective categories and niches and brands and segments. Emami, Exide, both have got hammered down. Okay. Are the numbers bad? Of course not. Well, in Emami's case, you can argue that profits haven't grown for the last 3 years. They've struggled through demonet. They've struggled through that Kesh King acquisition. They've struggled through GST. Now all these FMCG companies have found their mojo back and they've begun to grow high single-digit volume, mid-double-digit revenue growth. It's starting to come from many of the leaders. Why isn't it coming at Emami? You can crimp. But here's a company that throws out 600 crores of cash every year. You're buying it at 15,000 crores market cap. How the hell can you go wrong? But you know what? The promoters have pledged shares. So that's the risk you're buying. But is the business good? Yes. Have they been punished? Yes. I can't figure out why, except for the pledge issue.
Okay, so
Exide doesn't even have the pledge issue as much as... So
Exide brings me to the larger point about automotive. Because again, this is a big debate in the market right now, that is this the best time you'll get in your life to buy Maruti or to, buy some of these high quality auto franchises, play on consumption, play on India, etc. or just wait patiently and you'll find much better levels.
Yeah,
which side are you on?
I think in autos you have to look at who's got the more resilient business. So I would love to think that Maruti's got a very resilient business. If you look at the last 2 or 3 years of their performance, it looks like nothing could have gone wrong for Maruti. Okay, I agree with that. I think it's a great business. But remember, a car is end of the day a discretionary purchase. Okay, a lot of turmoil is going to play out in consumers' minds on discretionary purchases of 2, 5, 8, 10 lakh kind of spends. Okay, it's not going to come back in a hurry. Not in the way that demand for bikes is going to persist, especially from rural India. So purely on that ground, we are much more constructive on the resilience at a Hero Moto. And even at a Bajaj Auto, who is now playing the value game rather than the volume game, you know, you can crib about them having missed out the scooter curve and so on and so forth. But I still feel they have got a very durable business and an excellent export business which is unparalleled. Sure. So there are different shades in all of these stories. On autos, it's not that the story is over and that you need to sell the sector lock, stock and barrel. But look at the weak commentary coming from Leyland. The stock has halved from recent peaks, and yet there is selling pressure there. Okay, so I think the larger message you have to take here is if you have a very resilient business, an FMCG business that is spewing out cash every year, a high brand franchise, a good brand franchise that is going to endure for the next 10 or 15 years, then I think you can go out and buy it. If it falls by 20%, you should double up your position. It takes a lot of guts in these markets, I can tell you that.
Okay, all right, Dipen. On that note, we're going to wrap up this conversation. Thanks very much for joining in and sharing all those ideas on the fundamentals of the market. Thanks very much. We'll take a break now, but we'll leave you with some market opinion we gathered through the week, and once we come back, Ashwini Gujral will be chatting with us on the technical. Stay tuned.